Hi, this is Zach Mead from Zach's Traders Cafe with a look at the major markets on Wednesday, the 11th of May. Starting off with the FTSE 100, where I've got a couple of people saying that we've got a golden cross here, which between the 50-day and 200-day moving averages. As you can see, the 200-day moving average is going down, the 50-day moving average is going up. That's the black and the blue lines respectively, so it's not a golden cross, it's just a cross. But the 50-day line has crossed above the 200-day line, which could be to some a buy signal, just in the same way as that when the 50-day line crossed below the 200-day line in July, that did actually lead to the market falling quite sharply afterwards, and obviously then we had that low below 5,600 in February. So possible buy signal, I wouldn't rule it out. The other reason for not ruling out a buy is the way that so far this market seems to have bounced off an uptrend line from February at the that line there at 60.50, and while we're above that, there is an argument for buying the dips towards that support line. My view probably is that it's better to wait for an end of day close just back above the 50-day moving average of 6,200 before going long. RSI 50 plus would also help. It's only 44 at the moment, so that still implies some bearish momentum for this market. But if you hold 60.50, we could see, in theory, 6,500, which is the top of this 2016 rising trend channel. Next up, the DAX, which is slightly different in its makeup. Here we've got bounce off a support line from February, a bear trap rebound from below the 50-day moving average at 99.33. So while we're above that, we are looking for this market to go higher. RSI back above 50 as well, which is a positive. 101.94, the current level of the 200-day moving average, so that's the target while we hold above the 50-day moving average. A clearance of the 200-day line, then taking us up to the dizzy heights of 10,700 over the following month or so. So for the DAX, looking quite positive, really. Next up, we have the Dow, which has broken back above both the 10-day and the 20-day moving averages. 20-day line was suggested as being the momentum buy trigger, 17,890 at the moment, so we closed above that, and from my perspective, that means that we're on for 18,500 or even more over the next few weeks. Stop loss on the buy argument, 17,594, which is the 50-day moving average. RSI looking very healthy there with a double bounce off neutral 50, so that seems to be very well set up indeed on the upside as an early bird signal. Same story really for the S&P. Bounced or a bear trap rebound from just below the 50-day moving average of 2050, closed above the 20-day moving average around 2082, or 2079 rather, and that really points us up to the top of this rising trend channel from February at 2200. So very clear as far as these, well, three markets, the last three markets concerned, DAX, Dow and S&P. For the Nasdaq, becoming more clear as well, in the sense that we've got the higher low versus March at 42.32 then, and 42.99 for May, and a bear trap also below April for support. Above the 10-day moving average, aggressive traders will be going long 43.53, and an end of day close above the 50-day moving average at 44.20 should be enough to take this market back towards the 4,600 zone. Maybe that target of 45.92, the top of that December gap, will then come into play. But looking rather better as far as the Nasdaq is concerned. Now, all that's missing really RSI for the RSI to get back above the neutral 50 level versus 49 currently. Going on to cable, the currencies. I would suggest that we've actually done enough consolidating now. We've seen this market bounce around the 20-day moving average at 143.97, 144.97 for a number of days, and 144.39 for a number of days, and just bear trapping below 144. You might want to wait for an end of day close above the 10-day average at 145.13 before targeting a retest of the upper $1.40s. But it does look as though with this RSI rebound as well off this extended line from January, this market is ready to head higher again. On to euro dollar, and similar story as far as the end of consolidation is concerned. We've bounced around the 20-day line 113.57 for a couple of days now. Should hold this retracement, end of day close above 114.25, the 10-day average should then take us up towards 116. RSI at 54, which is bouncing on the right side of neutral. On to dollar yen, and overnight a bit of a fall for the cross. Nothing too dangerous at this stage. Really, while we're above the 10-day average at 107.56, this looks like this is a recovery situation, especially with the bullish divergence that we've had. And 110.63 still the target at the 50-day moving average, also the top of that falling trend channel from January. Finishing off with gold, and we were looking for support to come in through the 1260s. That's effectively happened, just bounced briefly at the 20-day moving average, 1258.74. End of day close above the 10-day moving average at 1278 should be enough to take this market back towards the best levels of the month at 1300 plus. After that, 1350 in focus at this February resistance line projection. That's it from me. More updates at the same time tomorrow.